This is the final segment of Chapter 8, so Part 6, and welcome. We're going to be looking at the higher education credits in this segment. So we have the American Opportunity Credit and the Lifetime Learning Credit. The American Opportunity Credit is the more generous of the credits. It is a 100% credit on the first $2,000 of qualifying tuition and fees, and 25% of the next $2,000. So the actual amount of the credit, as you can see, could be as much as $2,500. To qualify for the credit, it's intended for students who are pursuing higher education, and it's for those first 4 years, so the obtaining of a bachelor's degree in 4 years. Part of the credit is refundable. You can see 40% of the credit could be refundable, but not so if the child is going to be subject to the kiddie tax. The lifetime learning credit is similar. It's intending to make sure everybody's qualified to enter the workforce or is already in the workforce and maintaining their skills. It is, as I mentioned, a little bit different. It's non-refundable. There is no refundable element here, and it's only 20% up to a max of $10,000 per tax return. Okay, so the American Opportunity Credit was per student. This is per tax return. If you have 6 students on the tax return, you would still be capped at $10,000. So the max credit here is only $2,000. There are some important differences, as I mentioned. First of all, the Lifetime Learning Credit is per tax return, whereas the American Opportunity is per student. Also, the Lifetime Learning Credit can be claimed for an unlimited number of years, whereas the American Opportunity Credit is just a 4-year credit. And the Lifetime Learning is phased out at a lower income level, and as I mentioned, it's completely non-refundable, whereas 40% of the American Opportunity Credit could be refundable. In terms of what qualifies for the credits, we can see qualifying tuition and fees or any out-of-pocket costs necessary to enroll in a qualified educational institution. So it's not too difficult to get to the cap on these dollar amounts. Textbook, software, other items required for education. And if you pay in advance, let's say you pay for tuition at the end of the year, and it's going to be for education in the next year, you can still claim the credit for payment in the earlier year, 2018, as long as the education is going to start in the next 3 months. If you're using a student loan, you're still eligible to claim the credit. However, if you're using a scholarship or a grant or any other type of assistance, you're not eligible to claim the credit. And certainly if you're using any funds out of a 529 plan or a Coverdell Educational Savings Account, you would not be entitled to claim a credit on those either. The eligible student is any taxpayer, spouse, or qualifying dependent enrolled in a qualifying education institution. UH is a qualifying educational institution. And to receive the American Opportunity Credit, you must be enrolled at least on a half-time basis, based on however the institutions define that. So if you're pursuing the first 4 years, UH definition would be 12 hours is full-time, and as a result, half-time would be only 6 hours per semester. Lifetime learning, you would have to take courses that are improving your job skills. Here's the phase-out level, and as was mentioned, the lifetime learning is phased out a much lower level than the American Opportunity Credit. And that's partly because lifetime learning is intended for individuals who are probably already in the workforce, and we are targeting to those who are having difficulty. They're possibly unemployed right now and are obtaining new job skills. Whereas the American Opportunity Credit is targeted for students, and often their parents might be in a higher income level and still helping them through school. So here's the phase-out calculation. We first of all look at the amount of the credit. So if you're eligible for the full American Opportunity Credit, you would have $2,500 as the amount of the credit, and that would also appear over here because this ratio is going to give us how much you're going to phase out. The phase-out range, you can see, for married is $20,000. And then you would simply look how much of the income is greater than 160. So if I have someone with 175, we'd put $15,000 up there, because that's the amount over the lower threshold of 160. Now, you can't claim both the American Opportunity Credit and the Lifetime Learning Credit in the same year. That probably goes without saying, and as I mentioned, you can't use funds coming out of a 529 or Coverdell Educational Savings Account for the credit. Some of the requirements for the credit are listed here. And with respect to the student, they must not have a felony conviction for possession or distribution of controlled substances. In other words, they better not be a drug dealer. And you can't have a dependent claim a credit. Instead, that would end up on the parent's tax return. So here's an example. We have a husband and wife, H and W, with modified AGI of 117. During the year, their daughter Kay began studying on a full-time basis for a bachelor's degree at UH. So she's in her first year of education. In August, they're going to pay for her tuition of $9,500 for her material for the first semester, and then in December, they're going to pay another $9,500 for the next year. They also pay $8,000 for the wife to have some training to improve her job skills. So what we have is a situation right here where we're looking at the American Opportunity Credit, and they've obviously gone over the ceiling. They really didn't need to pay this in December. They would have been better off actually waiting until the next year where they could have used it to claim the credit for 2019. The wife is going to be for a lifetime learning credit. She's improving job skills, and it's below the $10,000 cap there. That's the max you can get. So she looks good in that sense. Here's the calculation for the daughter. She's got qualifying expenses of $19,000. The credit, of course, only requires $4,000, and so she's got receiving the full $2,500 credit before we consider any of the phase-outs. The wife has $8,000, so she did not hit the cap, and as a result, it's a 20% credit. She'd have $1,600. Let's look at how those phase-outs actually impact the amount of the credits. Their modified AGI was 117, and for purposes of the lifetime learning credit, it starts being phased out at 112. So they're $5,000 into the phase-out range, and that total phase-out range is $20,000 for a married couple. So they're going to lose 25% of the wife's lifetime learning credit. So we can see that right here. Now their income is lower than the threshold for the American Opportunity Credit to be phased out, so they're going to receive that in full. But the lifetime learning credit is phased out 25%. So total credits on this return for higher education would, higher education would be $3,700. Here's a problem out of the back of your textbook, the chapter 8. Here we have Laureen is single, and she paid $2,008 for the qualifying tuition for her twin daughters, so she's got two of them. So total here is $5,006. They qualify as her dependent. She also has a son, Ryan, who she's paid $1,900 for him to attend his junior year. So he's still in the first 4 years at State University. And she paid $1,002 for herself to get some improvement in her job skills. So we're asked about her credits for purposes of these various people in various scenarios. So first of all, we're going to assume her AGI is $45,000, which is relatively low. She's certainly below all of the phase-outs, and as a result, we're just really interested in what would be the credits. She's got those two daughters, Sherry and Mary, and so the credit for American Opportunity is 100% of the first $2,000 and then 25% of the next $2,000. So there's a total credit for each of them of $2,200 or $4,004 for the two of them. Ryan also is eligible for American Opportunity Credit, but he has not even hit the first $2,000 cap. As a result, he's got a credit of $1,900, 100%. So the total of the American Opportunity Credit for the three children is $6,003. For Laureen, we have to consider her lifetime learning credit, and again, she's below the cap, so there's no phase out of that at all. She's got a 20% credit on her $1,200, $240 plus the amount eligible for the credits for the three children, so total education credit $6,540. Now we make a change in her AGI, which will put her in some phase out for purposes of the credits. So how is this actually going to play out now? She's a single taxpayer, and a phase out level for the American Opportunity Credit is at $80,000. She is then going to find that she has exceeded the credit's limits, because that credit actually runs from $80,000 to $90,000 for a single taxpayer. So at 95, she's fully phased out of the American Opportunity Credit. So the credits for the children are gone, and certainly her lifetime learning credit is also gone. We see that right here because the lifetime learning credit runs from $56,000 to $66,000 for a single taxpayer, and as a result, she is 100% phased out. There is zero credit. Now we're going to go back and change her AGI, make it lower again. And we're going to increase the amount that she paid for Ryan. He was going to graduate school, and it's his 5th year. So he's now no longer eligible for American Opportunity. He's now a lifetime learning credit that Ryan would be considered for. So we go in and let's think about this. She's not phased out, so we can pretty much escape that. The credits for the 2 daughters remains the same. We didn't change any of those facts. Now we consider the credits that are available for Laureen and Ryan, and that's the lifetime learning credit. We can see again at $45,000, she is completely eligible for these credits. She is below the lower threshold for phase out of a single taxpayer, so 100% would be allowed. But the credit is a per tax return credit with a cap of $10,000. So if you kind of think back, Laureen incurred $1,200 for her own education, and then she paid $12,000 for Ryan. So there's actually $13,200 that has been spent for improving job skills and higher education. And the cap is $10,000. It's a 20% credit. So the max credit for lifetime learning will be $2,000. And then, of course, we have the credit for the 2 daughters. This has got Ryan there by mistake. So the total eligible credits would now be $6,400. The form for the higher education credits is right here, the 8863. And you can see we've got the American Opportunity credit up there first, and then we do the lifetime learning credit. Thanks for listening. That concludes Chapter 8.